Penny stocks are often overlooked by the mainstream, but for savvy investors, they represent untapped opportunities hiding in plain sight. These low-price stocks, typically under $5, can hold enormous potential. We're talking about small investments that can generate life-changing returns. In a market where institutional money chases stability and blue chips, the real gains often lie in these undervalued, under-the-radar gems. If you're looking for high-growth plays that can potentially 5x or even 10x your money in the coming months, then you need to pay close attention. These aren't just lottery ticket stocks. They're real businesses with real revenues and strong forward outlooks. And today, we are diving into two penny stocks that have the potential to make you rich if you get in at the right time. These are not random stocks picked off a list. They're supported by solid fundamentals, favorable market conditions, and in some cases, even have the quiet backing of Wall Street analysts who see value others have missed. So if you're serious about making money in the stock market, make sure to watch till the end and remember to subscribe and turn on notifications so you never miss an update on the hottest stocks in the market. First on the list is Ambev SA, trading on the NYSE under the ticker ABV. This company is one of the largest beverage producers in the Americas and operates across several countries, including Brazil, Argentina, and Canada. Its portfolio includes an extensive range of beer, soft drinks, and non-alcoholic beverages. If you've ever had a Budweiser, Stella Artois, or Brahma in Latin America, chances are it was brewed and distributed by Ambev. Now, this isn't just another beverage company. What makes Ambev compelling is its deeply rooted distribution network, powerful brand portfolio, and smart digital transformation strategies that are starting to yield significant returns. Recently, Ambev impressed investors and analysts with its first quarter financial performance. The company reported a high single-digit increase in top-line revenue, indicating resilient demand and effective pricing strategies despite a challenging macroeconomic environment. More importantly, volume grew by 0.7%. Not a massive leap at face value, but enough to push the company to all-time high Q1 volume levels. This reflects robust consumer demand and successful regional campaigns. A key highlight was the performance in digital sales channels, where gross merchandise volume surged by 60% and direct-to-consumer orders increased by 5%. This suggests Ambev is not only defending its legacy business, but actively expanding into e-commerce, delivery, and mobile ordering, future-proofing its operations in the process. Financially, Ambev continues to show strength. Net revenue per hectoliter increased by 6%, which is a strong indicator of pricing power and product premiumization. EBITDA, earnings before interest, taxes, depreciation, and amortization, grew in the double digits, with margin expansion of 180 basis points, suggesting more efficient operations and cost management. Although net income was flat year over year, this was expected due to a one-off tax benefit in the prior year. Still, the company delivered BRL 1.2 billion in cash flow from operating activities, which marked a 68% increase year over year. That kind of cash generation in a penny stock is rare and speaks volumes about its financial health. Investors should also take note of Ambev's generous dividend policy. The company recently announced a BRL 2 billion intermediary dividend, bringing the 2025 total to BRL 4 billion. This commitment to shareholder returns makes ABEV an income-generating asset in addition to its capital appreciation potential. Current capital expenditures came in at BRL 828 million, about 18% lower than last year, showing more disciplined spending. Meanwhile, cash flow from financing activities stood at minus BRL 8.8 billion, mainly due to dividends and share repurchases. That shows a balanced approach toward growth and returns. With a current stock price of $2.47, analysts have placed a 12-month average price target of $3.07. Some are even forecasting a high of $4, representing over 60% upside. Ambev is a textbook example of a company that delivers consistent performance, has a stable moat, and is available at a bargain valuation. As emerging markets recover and consumption patterns improve, this stock has every reason to climb higher in the months ahead. Now let's talk about another hidden gem that's taking the health tech world by storm. GoodRx Holdings Incorporated, listed on the NASDAQ under the symbol GDRX. If you've ever shopped for prescription drugs and been shocked by the price, GoodRx is the company working to solve that exact problem. They offer a platform that helps consumers find the lowest prescription drug prices in their area. It's an elegant solution that combines data analytics, pharmacy partnerships, and user-friendly design to save people serious money. But the company isn't stopping there. It's now transitioning into a full-stack health tech platform. That's where things get interesting. On June 6th, GoodRx unveiled a tool called Lifecycle, which marks a bold step into developer operations. This tool allows engineering, quality control, and platform teams to create isolated, temporary environments to test code under real-world conditions. In simple terms, it helps tech teams innovate faster while cutting infrastructure costs. Lifecycle has already enabled GoodRx to reduce deployment issues, improve cross-functional collaboration, and minimize the need for expensive, prolonged staging environments. What makes this move especially exciting is that GoodRx has released Lifecycle as open-source software under the Apache 2.0 license. That means anyone can use it, contribute to it, and build upon it, enhancing both the tool and the company's reputation within the broader tech ecosystem. Now, let's talk numbers because the fundamentals are catching up with the innovation. For Q1, GoodRx reported $203 million in revenue, a 2.6% increase over the previous quarter. That might seem modest until you look at the bottom line. The company swung from a $1.01 million loss to a profit of $11.1 million. Profit margins improved dramatically, climbing to 5.4%. Earnings per share flipped from a loss of $0.003 to a gain of $0.029. These are not just accounting tricks. They reflect operational efficiency, improved monetization, and lower costs. This kind of financial discipline is rare in a company that's still aggressively expanding its technology footprint. At a current stock price of $4.71, Wall Street analysts have set a 12-month average price target of $6.34. That includes a bullish forecast of $9 and a floor at $4, which still gives investors downside protection close to the current price. The average target represents a 25.3% potential upside, but when you factor in the long-term optionality in GoodRx's open-source strategy and its ability to build new products off its existing data infrastructure, that number might be conservative. This is a company moving in the right direction, growing revenue, improving margins, and expanding capabilities, all while solving a real-world problem that affects millions of people in the U.S. alone. As prescription drug prices continue to rise, tools like GoodRx become more valuable, not just to consumers, but to the entire healthcare system. And for investors, that could translate to explosive returns. Well, that concludes our list of top penny stocks with massive potential. Remember, investing in penny stocks comes with risks, but also brings opportunities that large-cap stocks simply can't match. If you're doing your homework, tracking performance, and staying updated, these low-cost stocks can offer some of the highest returns available in the market today. Whether it's Ambev's strong fundamentals, GoodRx's innovative tech play in healthcare, or Tellurian's massive energy vision, these companies represent smart bets for different types of investors. Don't forget to like this video, share it with fellow investors, and hit that subscribe button with the bell icon so you're always ahead of the market. Until next time, keep your research strong and your investing smarter.